All right, so everyone, we were live. Welcome back. We're going to talk today about something that I want to talk about for a while, which is pretty much 5 reasons why your trading strategy you have right now in Forex or whatever other market you're trading with, why your strategy isn't making you a living yet. And we're kind of going to cover that. I'm with Alejandro today. So what's up, Alejandro? How are you doing today?
Hi, Etienne. How are you today? Now we are finally in the same time zone after several months of not being in the same time.
Yeah, I went the same. I was sure you were like an hour behind me, so it's kind of strange.
Yeah, but it's nothing compared to when you were in
Yeah.
Asia or when I was in Europe. So it is it is a lot better now, the time.
All right, let's do this. So Alejandro was working with me in the academy. He's a student that went through the academy before that. He's now pretty successful with that, doing deals with investors in Mexico and all around the world, which is pretty cool as a trader. So we want to kind of cover that, and we'll just go like one each. We've planned this out before a little bit so we can give you guys more value. But as always, if you have any questions, comment below in the chat. We'll make sure to answer your question over time and get you some answers. And the best live we do like this are always when people ask questions, they're engaged, because that's where we can deliver the most value. So combo with your question, we'll be able to go through that pretty soon. Okay, so I'll actually let Anel go with the first reason why your strategy might not be profitable, or you might not be making a living from that right now. So go ahead with the first reason why that might not work. And you use it now, just unmute yourself.
Yeah, sorry. So the first reason is basically you may have a plan or you may have a strategy, but you didn't test it. So you just like basically scoured something from the internet or got something from someone, and you just start running live with that. And that is one of the biggest reasons we have seen that people lose money with strategies, is because they just take it without knowing how it performs, how it works really, what type of things are in it, like if it's even profitable or not, and they just run with it. So that would be the first thing that we see people having problems with, and it's basically lack of testing for their strategies. So basically, the first thing you need to do with every strategy you get is first understand it. Second, try to test it using manual testing. You can use software like Forex, or you can use a trading journal, or you can learn to code it or code it and back test it. But the first thing you need to do is to test it, because if you don't know if it works or it doesn't work, then it is just a waste of time to go live with it. And also you're going to probably lose a lot of money in the process of that.
Yeah, it's kind of an obvious one, like the easiest one to understand, and we'll kind of go more in depth over time as we go to these 5 reasons why you might be making a living yet with that. Kind of simple, but at the same time, that's why people that buy signals can usually not make a living with them, because they don't understand the system like completely deep down. And if you take some time to understand the stuff and backtest it so you can get comfortable with the stats, that's going to simplify a lot the process. So I'm curious to hear, Alejandro, what do you think is the backtesting process people should go through when they're starting out?
Well, it depends if you have a discretionary strategy or if you have a automated strategy. If you have pretty mechanical system that you can backtest with like make an algo, or you have an algo and you can backtest it, then the process will be different, because it's a lot easier to plug the numbers into a computer and to let the computer run the backtest than to have to go through all the data manually and to run the backtest manually, right? So the process is different if you have a manual strategy or if you have an algo strategy. I will start quickly with a manual strategy, and I will also here go to the next point that people have issues with is when you are testing, the data you are testing on is really important. If you are testing on low quality data, you may think that everything is running well because you only have a few data points. But then once you test with high quality data, you may see that it's completely different. So when you are testing, the first thing you need to know is that you need to get high quality data. There are many sources of high quality data out there. You have Lucascopy, which you can download free high quality data. You can pay for quick high quality data, and there are many other options there. So later we will link down in the description some of the tools that I use and the team uses to backtest, to automate our things and that, so you can check them out. But basically what I do is everything I do on manual, I use Forex and download the high quality data from them, and then go bar by bar analyzing my strategy. Okay, I have my strategy in a trading plan format in which here, it's basically a step-by-step checklist in my case. And I go through that, I go to the charts and then pause, check my process. If I find a setup, then I take it. If I don't, then I continue in the next bars in that. So that's the first process. It's basically, you have to understand your strategy. You have to execute it. Basically, you just go through your checklist and practice it. And then that is if you are manual. I would recommend using a software like SoftwareFX again, so that it tracks your trades and you get the stats after that, instead of you having to manually put like every single trade in a journal. It's a lot faster. And then once you have those, then you can do analysis on that. And for algo traders, what you need to know is, well, you first need to code your strategy. So you probably still have the same checklist version of your strategy like this, and transform it into code, test the code first to see that it works. And once you are doing the back testing, then you have to be checking first high quality data. For that, I actually use the tick data suite, which allows me to test even with real-time spread and things like that in the history. And then just go with reasonable, logical, like market sense, things that make market sense. So for example, you will not want to try to optimize your setting, your EA, that is a swing trading EA, to only take trades during 1 hour a day, right? You may want to like put those type of filters in a logical sense. So only during the Asia session or London session or London, New York crossover or things like that. So basically selecting the settings you may want to test and then running them on the high quality data, try to use the best practices for that. And then once you have the results, you will have a report, and the report is how you will get the information, right? So you will have how much drawdown it has, how the equity curve looks, how much profit you can expect, well, how much profit it did in the past. And then from that, similar to what you will do with manual back testing, you have your stats and then you analyze them to be able to determine if it's a good fit strategy for you or if it's not.
Yeah, that's cool. And so we already covered 2 reasons why you might not be making a living from your strategy yet. So the first one is about you didn't test it. Second one is because the data you have is the wrong data. So that's awesome. And I think it's important, especially for algo traders, but you also want to be able to, in any case, kind of get the confidence that you need to be able to trade it live and trade it well. And if you don't have the confidence in something, then you tend to kind of make a mistake and not do it right. That's awesome. And so here's the second or like the third reason why that might not work with your strategy. And that's what I've seen for a lot of people is the fact that they think that they do everything perfect and right in the market when they trade it live, but they make a lot of mistakes. And you have to ask them like also how many mistakes you make the past month. And they say, well, I think none. Then you look at their stats and the result, and it turns out that they make many mistakes that they maybe didn't spot themselves, but you need to kind of be able to spot your mistakes to figure out what you do wrong. And only having like, let's say only 2 mistakes a month can completely wipe out your profit with you having no profit at the end of the month. So you want to be able to kind of see your trades, understand, did I make a mistake the past month or no? And if the answer is no, then that's fine. But most likely we always make mistakes every month, and you better kind of figure out which one you make and how to correct them over time. So your stats might be really good in demo or might be really good in backtesting, but once you get to live, if you make mistakes, then your stats will be different. And until you kind of learn to cut those mistakes and kind of only get the best trades out of your account, then that always will be kind of a problem. So you want to work on that as soon as possible. And that's something that sometimes just like cutting a mistake can make you go from break even to profitable or from not profitable to break even just by cutting some mistakes. Then that's already a big step. So you want to kind of work on that if you can. So that's the second reason or the third reason why you might be making a living now with your strategy you have right now. So let's go with and I'll just say any questions on that for you guys, you can comment below in the chat, but that seems to be good. So let's go with the fourth reason. Alejandro, you want to jump with that?
Yes, the fourth reason has to do with the stat, which is something that I always look at. The fourth reason is bad understanding of the risk or volatility of your strategy. So you may have tested your strategy and you may understand how it works technically, and you may understand how much profit it may do. But one thing that many people have issues with is that maybe they test their strategy with 1% risk per trade. And while testing, everything is okay because you can have a 30% drawdown and you just keep doing because you're mechanically doing the things, right? So once you get at the end, you may be perfect with that. But the problem is, once you are with live money, if you have a 30% drawdown, are you going to be able to continue trading the same as at the beginning of the process? So how are you going to be able to continue trading the same as you were trading in your demo or the backtest? Or once you hit a 10, 20% drawdown, you're going to basically ditch your plan and start getting desperate and start doing trades out of desperation, which are not part of the plan, and then thus go back to the first part. They are not tested because they're not part of the plan. And then you are just basically losing more money because you are not following your plan. And in some cases, I have seen some strategies that are pretty volatile. I have seen some strategies that if you put 1% risk per trade, you could be making around 30% to 50% per year with those strategies, but you have to be able to have normal drawdowns of about 20 to 30% of your account. So that means that you have to be able to have a loss of 30% of your account and still trade exactly the same way you were trading before, do exactly the same things, follow your plan exactly the same, and then you will most likely go back again and get that profit. But what most people do is once they are in a small losing streak or in a longer losing streak, they lose confidence, and then they will stop trading their plan, or they will change their plan, even though they could have just been that down part of their equity curve, and they may ditch their plan and change to another trading plan just before their original plan started to pick up again and go into the profit zone. So people need to understand the risk and volatility of that. I comes to mind right now. Yesterday we had an Academy members only meeting, and one of the members was talking about how in his testing he used 2% risk per trade, but right now in his live trading he's using 0.5% risk per trade in order to be able to get more confidence in the system and to be able to be better in his actual live trading. To improve instead of having that extra stress and all that other things, psychological effects that can come with having a higher risk for his strategy, right? So understanding the risk and volatility of your strategy is pretty important, because you need to know what is statistically normal for your strategy to have. And also you need to know when things really break up and you need to rework again things, or when you just need to continue doing what you're doing and everything is going to be fine.
Yeah, and that reminds me of what we talked about earlier too. So it's always better to go slower in trading than to go too fast, because like when you go too fast, you make mistakes, you blow up your account, or things happen, and then you have to go back to going slow again. So better to go slow first and kind of going through the process. And that comes down to what Marco Tama, which we have in the team too, calls the gradation plan of graduating over time. Not going like from here, like not going from there to here, but going from like here, slowly, progressively to there over time as you kind of move forward. So that can be a good way to apply things too. And that makes a big difference.
Yeah, exactly. It's a step-by-step process, and you grow in the process, and your confidence also grows as you go up that ladder. That helps in all those parts.
Exactly. So if you have any questions, make sure you come up with them in the chat. We'll get to those in a minute. I want to go to the fifth reason we outlined for why you might not be profitable yet with strategy and making a living from it. And that comes down to your strategy not being in line with your goals and personality. So let's think about the fact that your goal is to make, let's say, $10,000 per month trading. That's your ultimate goal. Like you want to get there as soon as possible. Well, what if your strategy is like giving you not enough setup, or what if it's giving you too many setup, or what if it's like getting too big of drawdowns for your goals for what you want to achieve? How do you deal with that? And the answer is like you're stuck. You can't do anything. So you got to understand first what is your goal, what you want to achieve, and then you go backward to what do I need to do to get there. And that's the plan. Like that's the basic thing for everyone. So if you want to make that $10,000 per month, think about how many strategies you need to get there, giving you, let's say, each how many percent they give you a month, and just like reverse engineer to get there. If you do this, it's gonna be more simple. And what if you kind of force yourself to day trade and take many trades when you're like a really good swing trader based on your personality? That again won't work. So you need to kind of understand these things first. And I did like do some personality tests, some things that we can help you with that also in the academy. But just like take some time to think about it. Take some time to see what you're going to be the best at. What are your strengths? What are your weaknesses? Like, it's really hard to kind of sit down and look at those mistakes and strength, but you got to do it. And you got to kind of take some time to understand your mistakes, understand what happens, understand your personality and your goals, and then plan things accordingly based on that. Okay. And you'll see people that tend to go against their goal and they just want to make money fast, and that's the only thing they think about and don't think about their goals and the end result. They tend to be stuck and frustrated because like they do something that doesn't fit with them, and then they want to fix it later on, but they waste time. Would have been much better for them to just work on that first, get to the result that they want to have, and then kind of just keep that going for the long term. So that's important. And for me, it took a while going through day trading, swing trading, going back to day trading after, then swing trading after, to realize that I was really good at swing trading, not day trading at all. So you might want to do the same first to just save yourself some time and to get there faster.
Yeah, exactly. I think most of us have passed by that. I mean, I started first with super long swing trading, then went to smaller time swing trading, then day trading, and then with the test in the academy, it was basically like, yeah, you're good for shorter term swing trading and some of day trading, which was what at the end, before doing the test, I kind of like had already found out. But it is much faster to find out with the test telling you might be better suited for this. So first try this, and if it works well for you, then just stay with it. That also, it depends on your lifestyle. I mean, we have had people that may be trying to day trade, but they have a really busy lifestyle. So they may need to be worried about they have to go to work, or they just finish working and they are really tired, mentally exhausted, and then they go to trading. So that may not be the best in your interest because it doesn't fit with your life, with your objectives and your goals. So you may want to trace a different thing, right? And there is a lot of myths in the internet saying that you need to day trade or to take like 10, 20 trades a day or something like that. And that may be good for some people, but that is not for everyone. That is, as in trading, like we have a huge range of things. So you may have some people that are really good, super long-term, weekly charts only, daily charts only. And you may have some people that they don't even look at the charts. They have tick charts. They only look at the price movement, like change by change, and they trade that, right? And there is a niche for everyone, but you should not go like with just go on day trading and start day trading, and that's all you will look of or think of. No, you have to have a broader mind, and then with this type of personality test, you could be like, oh, I may be better suited for this. If this suits me, plus my goals and situation suits that, then I can try to trade this. And if it works well for me, then you develop yourself higher into that.
Yeah. And the worst thing you can do, guys, is trying or defining your trading style based on what somebody else tells you that they do, because that never works. Like you might hear, oh, I do this and that, and I trade with the Montreal or whatever, and I day trade and make a living. And then you want to copy that person. That's normal. That's fine. But if you only do that because that person tells you they do it and it works, then that's a recipe for disaster for you. Because you're much better thinking about what you should do for yourself based on your personality, and then do that. That's just
exactly
faster.
Like in trading, it is irrelevant if someone else works, like something works for someone else, because that person may have a completely different personality, different situation than you. So if you are comparing yourself to someone that is totally different than you, and you are taking that as is from them, then it may not fit at all your personality and your goals, right? They may have completely different things. So the ideal is to try to, you can take things from other people, but integrate them into something that is working for you. So that will be our recommendation in that part.
Yeah, awesome. I want to get to kind of some question in the chat. I've seen Irfan was asking about, can you share some trade strategy and market structure? Well, the only strategy we have is, I'll put it in the chat now. We have a course in that, free course. You can go through that at your own pace, where we teach you about a strategy, the one that we use both, me and Alejandro, which is like really good. So you can go through that, and yeah, you'll learn from there. So we use market structure, price action, Bongshuban, to make it like really strong. So you can follow that if you want, and it's free. So why not? Anyway, so I know we had Gary. So what's up, Gary? Welcome. Great to have you here, of course. Any other question you guys have for now, you can call in the chat. We'll answer like 1 or 2 more. Photoshop, Tamilian was asking about blowing up accounts. I'll have a video on that in about like a few days. It's going to be published on that topic, how to never blow up an account again. So make sure you click subscribe to the channel, and we'll be publishing that soon. And yeah, any other question you've seen, Alejandro?
Yeah, I'm trying to see, well, I have, the usual question of if I have $30, can you make 5,000? And I will actually come back to the risk and volatility part of the strategies and why most people lose money or they are not making a living money from their strategies. So yes, you can take $30 and convert it into $5,000. The probability of that happening before you lose the $30 or before you lose your account are pretty low. So that is like, it's just basically like what it is. Like, I know a couple of traders that can withstand trading with really, really high drawdowns, and they can make probably close to 100% or more per year, like on average, but they have to sustain like 80% drawdowns, 70 to 20% drawdowns on their account. Are you going to be able to continue trading as if nothing has happened and continue following your plan when you have an 80% drawdown? So you had a $1,000 account, you are left off with a $200 account. Are you going to continue being able to continue trading that? Or are you going to, as we said before, just like change completely and then go off the hook and start doing mistakes and start doing other stupid things or change your plan because you think it no longer works? What will be the case? There are really, really few people that can handle those type of drawdowns and recover from them. And those type of drawdowns are recovered in order to have a really high performance, which would transform a small amount into a larger amount. And for most people, it's unsustainable. You may be able to do it once, and then the next time you try, you will lose that amount. You will lose the money. So we never recommend to try to do that. It is, as we said, a step-by-step process. Go slowly, grow slowly, and then you can scale with that.
Yeah, I fully agree with that, and it comes down to the fact whether you want to treat trading like a entertainment, like a funny thing, like a hobby, or like a business. And if you want to like entertain yourself, have fun, yeah, totally fine. Try it out. It's gonna be fun. It's gonna be cool. You're gonna be happy sometimes, pissed off sometimes. That's fine. But if you want to make a business and like a long-term income, then treat things smart and do it the right way.
Yeah, this reminds me of the conclusion of yesterday's mastermind call, which was if you're going to if you're going to treat trading as a hobby, then you're going to be doing what most people do with hobbies, which is you're going to be putting money into it, and you may get something in exchange. You may get some satisfaction, you may get some enjoyment, or you may just get some torturing with yourself with the psychological effects of trading. But if you treat trading like a hobby, imagine how many people there are professionals playing basketball or professionals playing golf. And then they make money from that. But how many other people are treating it as a hobby and they just go and play basketball as a hobby and they pay for the ball, for the equipment, for all those things, and they never get anything back from there except from their enjoyment and their exercise and that. You can think of the same as trading. You can get some other things back, like so there are some people that are addicted to trading, like gambling, and they get back the rush and the enjoyment from that, but they ultimately lose money because they treat it as the same as gambling or as a hobby. So if you are going to treat it as a hobby, then be prepared to put money into it and to have that money disappear, same as if you were buying tickets to the concert. You get something back of it, entertainment, but you have to pay for it. And if you treat it as a business, then you will most likely follow these step processes and grow it, and then invest in it, and then get back profits after some time after growing your business. So that's a pretty nice conclusion there.
Yeah, of course. Anyway, guys, as you know, we always treat this as a business for yourselves, and we want you guys to do the same, of course. So if you want to get more knowledge on that, get more tips, make sure you check out the YouTube channel here. We have a lot of videos on that in the past. Subscribe if it's not done yet. We do like now 4 videos a week on Sunday, on Monday, Wednesday, and Friday. So you guys can kind of follow these over time. And yeah, we'll catch you back soon. So reach out to us if you need any help, and we'll catch you guys in a couple of days. Ciao.